can't believe how difficult the rules for goodwill are.
I know what you mean. If you're a public company, fine. But I really don't think the users of private companies care.
Keeping goodwill on the books forever and then testing each year for impairment is a waste of time. It seems really strange to me.
You're right. No human being would write accounting rules like that.
Especially since the banks tend to throw that information out anyway.
We need someone to give some breaks to private companies.
Hey, why don't we just amortize it over 10 years or less?
Shh. Now that's strange. Maybe we should also look at the goodwill again if there's a triggering event.
And then, if there is one, look at qualitative factors.
Yes, just because it looks strange, that doesn't necessarily mean there's an actual problem.
But if there might be an issue, then we could start crunching numbers using the current rules to determine if there is an impairment loss.
Sounds good to me, but I'm feeling a bit impaired myself.
Let's get out of here.
What makes you think this PCC proton pack will work?
Well, because although some of the rules are good for public companies, they just don't provide value to private ones. Take the derivative rules, for example.
You can keep them.
Now, hear me out. A company may want a fixed rate loan, but can't get one.
Because the banks just don't want to go there. So the company ends up with a variable interest loan. Lots of risk.
Precisely. So the bank couples the loan with a swap.
Which effectively turns the variable rate loan into a fixed rate loan.
Yep, but now you have a derivative.
And that means all the derivative rules. So the PCC proton pack will trap the complex gap and provide an exception for private companies?
Yep. If certain criteria are met, it will allow an entity to simply treat the loan as a fixed rate loan. Of course, there will be disclosures involved.
We just got a call for help. There's a situation with a lease between related entities causing some major VIE problems.
Come on up. We've got the PCC proton pack ready for you now.
We're here to help.
I don't know what I did wrong. I was working on this lease with an affiliated company and suddenly this thing appeared and said it was a variable interest entity and that I had to consolidate it.
So you set up a separate entity to hold a building that you then lease to your other entity?
Well, the whole reason I did it was to protect the asset.
And if you consolidate it, then it looks like you have an asset that in reality, a creditor can't even get to.
Yeah, it's crazy. So now after I go through all that trouble of consolidating it, the bank wants me to prepare another schedule to deconsolidate it.
I can understand that. The banks focus on cash flows and tangible net worth. Consolidating the assets simply confuses the issue for them.
That's it. That's the pronouncement I have to follow.
Let's take that thing down. I'm gonna go bag this bad boy.
What happened?
It gapped me.
What did you just do? My accounting rules are much easier.
We came, we saw, we simplified its behind.
What seems to be the problem? I've just acquired this other company, and we've begun the consolidation process. I'm allocating the purchase price to the various tangible assets and such.
Let me guess. You've run out of tangible assets, and now you have to allocate some of the price to intangible items, right?
Right. How did you know? Do you really know what you're doing?
Back off, lady. I'm a CPA.
Anyway, it's a lot of extra work, and the bank doesn't seem to care about them in the first place. Personally, I think they ignore them. First, you need to realize that these are not all the same.
We'll want to contain those that are customer-related intangible assets.
Unless they can be sold or licensed separately. Our strategy here is to simply not recognize the items separate from goodwill.
Here it comes.
But won't that make my goodwill figure even larger?
Yep.
Well, great. My guess is the bank will like that even less than the intangibles. No problem. I suggest to make the election amortize goodwill, and the whole thing will go away.
In fact, I insist on it. I'm gonna get this thing.
You two better get back to headquarters. We have some trouble here with the authorities.
We're on our way.
I'm going to have to shut down this little operation.
Why? We haven't done anything wrong.
Yeah, we've been helping CPAs.
You're out of your jurisdiction, always giving breaks to these small companies.
Look, this is no longer a private company issue. We need to make changes for all companies.
Yeah, we have developed a simplification initiative.
And may I see this simplification initiative?
No,
Why not?
because you didn't say the magic word.
Sir, you need to consider development stage entities. Under current GAAP, you have to show the present inception to date information in the statement of income, equity, and cash flows.
So big deal.
You also have to label the statements as those of a development stage entity.
Wah, wah, wah.
And, as if that's not enough, they even have special rules for VIEs.
We could simply eliminate all the rules and allow development stage entities to look like anyone else.
I really don't have time for this. Stick to the rules.
Don't you get it? In today's environment, that information is just not relevant to the users anymore.
I don't care about the users. All I care about is that we have lots of complex rules.
Hey!
Mr. Mayor!
How did this happen?
We were doing just fine until this ethicless wonder let all the rules back out.
Is that true?
Yes, it's true. This man has no ethics.
So what are we looking at?
Human sacrifice. Audit and tax staff working together. Mass hysteria.
Then get out there and fix this.
What's happening?
All the ghosts are massing together.
Well, this is certainly extraordinary.
That's another issue that needs to be simplified.
Yeah, if an item is both infrequent and unusual in nature, then it's considered extraordinary.
What a pain, because then you have to separate it in the financial statements and show it net of tax and show the earnings per share.
Mr. Standard Writer, I order you to simplify all complex and useless requirements as they relate to all companies.
Are you on the FASB board?
No.
Then follow the rules.
Jamie, when someone asks if you're on the FASB board, say yes.
You started this, and now you'll finish it. Whatever you choose, the ghost's form will become.
Think happy, safe thoughts. Or better yet, clear your minds completely.
Oh no. What is that? You thought of something, didn't you?
I tried to think of the most harmless thing. Something I love from my profession. Something that could help us with financial literacy. And it just popped into my head.
Don't tell me.
Yep, it's the AICPA Feed the Hog mascot.
Well, this definitely looks like an extraordinary item to me. We need to simplify this.
But how?
Why don't we just eliminate the category altogether?
That's a good idea. But won't the users be missing some vital information?
I have an idea. Why don't we just add some disclosures when an item is considered both infrequent and unusual?
It's worth a try.
We did it! We simplified another complex accounting issue.
Anyone got some eggs to go with this bacon?